Hello, I'm Effie Pilarino, and today I'm delighted to have one of my favorite authors, Driss Temsamani, who is a veteran at Citibank and has been in parts of the bank, mainly innovation. You're heading digital now in the Americas. You've had experience in Latin America. Most importantly, you are the author of the Agentic Bank. Welcome, Driss. Thank you for
Thank
joining
you,
us.
Effie. Thank you very much. Thank you for the kind introduction. You and I were chatting right before you started recording, and I told you we could just basically, this could be just a conversation, an informal conversation, and so much is to be discussed and discovered in our mutual interest, which is fintech and innovation, and now AI, blockchain, and everything else. Yeah.
Yeah, and actually, rarely do I have the opportunity to have finished reading a book and then discussing it with the author. Usually, it's like the book comes out, I reach out to the author, we discuss. But in your case, I have not only read the book, we've also discussed it on the Fintech Book Club. What I would say is for our viewers that for me, this is a very special book because it comes from you. You're a practitioner. You're not a consultant. You're in the industry. You understand traditional incumbent banking. You understand central banking. You're advising central banks. You have a very global picture of our industry. You've been in innovation for a long time. So you bring a perspective that is very much focused in the internal transformation of the business. And I would dare to say that your book could be and should be read not only by banks, because a lot of the examples and the practical frameworks that you offer are very good for a corporate business, especially since you bring the Treasury. So
Yes.
let's start with your main idea that you bring to the table, which is to make this clear distinction of what is agentic versus digital. That it's not a little bit more AI that, especially in financial services, we've been
Yeah.
used to. So tell us how you think about it and how you've seen even the evolution since you wrote the book, because we know the book process takes time.
Yes, it was back in 2023, critical year for that pivot, that transition of generative AI, prompting and being assisted by the model, which was fascinating, although the models were hallucinating at that time because they were not grounded in context. But of course, we knew that it was going to change as we had access to technologies that allowed us to vectorize enterprise databases and connect that context to the models and ground them in reality so they can hallucinate less. But let's pause there before I can go on how we did that pivot to agentic. But going back to your question of that digital transformation versus an agentic business model. And I think it's important for us to step back. I always like to go back and think on the impact of the internet. For us, the internet was a window to reimagine business. So you could take it from 1994 to all the way to 2000, 2001, having access to the internet for the first time, same way we had access to ChatGPT in 2022, opened up a window and allowed us to, as I said, to reimagine business models. What can we do with the internet? And this was, again, when you said that my book applies to multiple industries, same way. Reimagine business models, which was not just for banks, it was for all industries, even for the public sector, for how we cleared in countries, how money moved locally and cross-border. That internet allowed us to reimagine how money moves, how money settles. It allowed us to imagine commerce. It allowed us to reimagine human connections. And it allowed us to move, at least for us as a financial industry and for many other industries, it allowed us to move from that process automation to doing business differently. And that's what I call digital transformation. Digital transformation is very different than process automation. And the process automation is always linked to efficiency, cycle time, and removing manual process. Digital transformation is Do I go direct to consumer? Once I digitize everything in my business model, now I have access to more data, and data starts to become part of your value proposition. So the discussion is, what can I do with all this data? And so that mid 2000s, all the way to that 2022 AI moment, was really us digitally transforming not just process automation, but changing how we do business, reimagining client experience, reimagining the form of money, reimagining potentially how we do distribution, our supply chain. All of that was part of that internet window that we got with Mosaic or with Netscape, which sparked all that creativity. Not to forget that many businesses were born from that, didn't exist, and became competitors to banks and competitors to potentially hospitality industry, transportation, media. There was a lot of disruption, but it was really not just disruption, but the pie got bigger, which means the size of the economy grew as well.
And there was more. The internet was born, really, which didn't exist before, right?
Absolutely.
And we can safely say that the platform business model was born.
Absolutely.
Through
Absolutely.
the internet.
Yes. Employment. Downloading an app on your smartphone and answering a couple of questions, and now you have a job. And potentially there was also social impact. A lot of the people that did that were part of the informal economy. Informal economy is still very large. And in that informal economy, there were people that were not financially included. But of course, by downloading that app and using your bicycle or your motorcycle, potentially your car, to deliver food to someone's house or do ride sharing, became a whole economy. Not to mention the creator economy, where basically, again, with your smartphone, creating videos, you now have income. And so we saw social impact. And the reason I wanted to highlight that process automation to digital transformation, which became part of reimagining business models, but also impacting the social fabric of society and growing economies. Now we sat at another
inflection
90s, late 90s moment, internet moment, 2022. And so many of us that were involved with AI were doing some machine learning, messing around with some Python coding. And yeah, we never had access to models. Access to models was a privilege, was only to few that worked in certain industries that saw what models were, and that transformation of models from machine learning to deep learning, neural networks, and then transformers, which gave us 2022. And there was a whole evolution. But we individuals, some of us running businesses, we didn't have access to models. But 2022 gave us that opportunity again. Here we go again. It's our Netscape moment. It's our Mosaic moment. Now we can see what's possible. And what was possible was not another digital transformation. This was different. This was different. This was related to the nature of work itself. And of course, it's going to have that social economic impact, depend which route we're going to take. If it's a scarcity or an abundance route, which I'd love to discuss with you down this session, are we going to collaborate or compete? In the space of AI is going to define that social economic impact. But for sure, that imagination of what can we do with this, here we go again. And for me personally, involved with AI in the late, let's say 2010 to 2016 to the early 2020, 21, up to that 22, I was fascinated. I couldn't stop thinking about, wow, as a banker, someone who's been in the industry for 30 years, here's a chance again to reimagine banking. And so in the early days or the early months of ChatGPT and those hallucinations, I knew there was a potential of grounding the model with context, which was the kind of the beginning of that agentic story. And I saw it in my personal life. For example, I would use ChatGPT to talk about, I'm not feeling well, and I wonder what this could be before I even called my doctor. But then I realized that it allowed me to upload labs, for example. So if I can upload my blood work with the prompt, with the same exact prompt, I was getting a better answer because the model was analyzing my blood work Or potentially I could use a financial spreadsheet or something that I can upload to the prompt and I could get better answer. A lot less hallucination, grounded in context. And what was missing for us to connect the models to enterprise data, let's say in the bank, what was missing is to ask the model to do something for you. And which came very shortly after that with new technologies that were developed, the same way with how we could vectorize databases and tokenize data and link it to a model to have that context. Now we could orchestrate and create agents that actually can do something based on the response of the model, grounded in the context. And that evolved, and it evolved very fast. From 2022 to 2023, things were moving very fast, all the way to 24. So I started the Agentic Bank. Yes, of course, thinking about how we could change banking if we had that agentic orchestration, not only in the context, but do it for me and do it for me across multiple agents. As you saw in the book with the Lisa and her Treasury agent examples, it was really an orchestration across multiple domains of Treasury. But of course, there's nothing in that orchestration and that technology which couldn't be applied to a public sector or private sector industry. It was all reusable. All those concepts, those modules in the book were usable for all industries. But to your point, I started that work in 2023 all the way to publishing the book in 25. And I found myself as I was publishing the book that things had evolved already. So I even did a second revision by adding an implementation guide, an additional chapter, because I felt that I needed to continue the discussion inside the book for those that were reading it so that I can at least complete that part of where we were in time in
Because the truth
2025.
is, it's only in 2026 that the buy-in around the capabilities of agents is really pretty wide. In 2025, it wasn't. There were figures that are AI technologists that were doubting if agentic capabilities were ready for the market. And here we are today, and we have all sorts of infrastructures being built. Visa is offering infrastructure for agentic payments, of course, with the, let's say, the existing wrappers. We have other credit products launched in the market. We don't know publicly if there's corporates that have internal workflows, agentic workflows, but that's where we are today. We're discussing this. What I find fascinating in your book is this warning around KPIs of agentic pilots or in production workflows that you talk about. Can you tell us a little bit about that, and what is the risk when a bank, let's say, has orchestrated a certain outcome, be it in the Treasury Department or in fraud or let's say a customer outcome. Let's say a customer calls in, they've lost their card or it is stolen. There's a whole series of steps that happens behind the scenes, right? That is touching different departments of the bank. Let's say that they're now agentic. How do we measure the success of this orchestration? You make a very important point.
Yeah. From the inception and from the beginning of money, or us as humans thinking about creating money so that we can establish trade, as we moved from trading locally in a small village to doing it globally, we needed to create a form of money that would allow us to do that cross-border trade, something that will hold value and something that we can exchange for whatever goods and services we need between different parties. But at the center of that, we needed to establish trust. Trust was the center of, trust continues to be, and will always be the center of any form of money. And I'll fast forward in a minute, but I needed to start there to answer your question. As a bank, and there are many industries like banks who are highly regulated, you have two licenses. You have a regulator license, and you have your customer's license. So you operate with two licenses, which are fundamentally built on trust. From a regulator perspective, you are the entity that needs to maintain financial stability in the system, and so you're highly regulated for that. and you cannot do anything that will create instability, because that will mean instability basically at a higher level of the country. So basically, you're the pillar of stability for any government, for any society, for any sovereign country,
for
economy
any
in general, and that has ripple effects globally. But you also operate with your customer license. You cannot fail your client's trust. Every day, you got to make sure that is table stakes. That
you earn it. There you have
earn it every single day. So
Yeah,
as we talk about agentic, as we talk about having autonomous agents making decisions on behalf of a corporation, even for individuals, when we talk about agentic commerce and you allow an agent to go out and shop on your behalf and not only purchase, but have goods delivered, access in your bank account, that trust has to be embedded in everything we do. It's fundamental. So when I wrote the Agentic Bank, I spent a lot of time thinking, what is the governance model around all of this? And to have a governance model built around your agentic orchestration means you need to have access to data that can make you comfortable about the risks you're taking. And that only became possible when we were able to access the chain of thoughts of the models. So we had explainability. We could actually see what the models were doing. Because if you recall, there was a time in this very fast timeline, this acceleration, this 5-year accelerations, there was a time where we were saying or discussing, we just don't know how the models think, or we don't know how they come to those conclusions they come with. And it was almost like a sealed box, and we couldn't understand what was happening inside. And we still, as of today, cannot explain how the models, because the models can take different routes to come to conclusions. But one thing for sure, we should be able to certify a calculation. We should be able to know that 5 + 5 = 10 and not 11 and not 9. And so if we understand the chain of thoughts, and if we can verify the intent and also the outcome and put numbers around those and create what's called an audit console that has KPIs, then we should be able to certify the agents. And we should be able to know the false positives, and we should be able to know when they get it right, when they get it wrong. And then we can get comfortable with the risk we're taking. And so, yes,
but really it's about being able to attribute at what point of the decision-making chain there's something that we don't understand or that we are not comfortable with, right? So it's a bit of attributing, because we're talking about the chain of decision-making, right?
Yes, because a database, when database is built on input outputs, and in the center between inputs and outputs, you have a code that was programmed, that was embedded in the database by software engineer, and it's a calculation. And so it's easy for us to know that the answer or the result, the output of a database, once there is an input, is going to be 100% accurate unless there is a bug. And if something breaks, there's a bug.
Hold on, because here there's some of these decisions will be deterministic because it's a calculation, as you say.
Correct.
But other ones won't be deterministic; they'll be probabilistic.
Correct.
And there isn't a way to say, let me verify the calculation. It's a question of whether we can attribute it to something that makes sense from a risk, a strategic perspective of what we want.
Correct. And in the case of the Agentic Bank and the examples that were given in the book, which was an orchestration of several agents on a Treasury use case.
Yes.
You have LLMs that have access to tools. And basically that's what an agent is at its fundamental description or the basic description. You have an LLM, which is grounded in a subject matter expertise context. So it could be cash flow forecasting. It could be a risk analysis using a Monte Carlo for probability calculations, so forth, so on. So you have in the book, I have Alejandro, I have Lisa, and I have Sam. Each one of them is cash flow forecasting. The other one is operational transactions and bank relationships. And the other one is more of a liquidity manager. And so each one is a model that has access to tools. And so as they orchestrate, what they're doing is they access the context databases, and then they're able to take actions unless Lisa, who needs to take certain decisions, who's a human in the loop, needs to intervene. Now, that reasoning around the context data can have different paths. And so where people get uncomfortable is every time you ask, every time there's a situation, the model may take different paths to get to the answer. And people get uncomfortable with that. And what I covered in the book, to your question, is I focused more on the auditing the outcome, not the path that the model is taken,
Okay.
which makes people uncomfortable. So every time I ask the model a question, I get different answers. But my point was, is the outcome of the answer the same? Is 5 plus 5 equals 10 versus 9 or 11, even though the model might take different routes to get to 10? And so I'm auditing 10 as a result of the calculation versus which path you took to get to 10. And now the risk taking of the probability you're referring to, Effie, that's what we need to get comfortable with. So we need to understand the outcome because banking is taking risks. Banking is managing risk, and many other industries do the same. And so as long as we're in this certain threshold of the probability, we should get comfortable with the agents and the outcome the agent is giving us. So yeah, I covered a lot that in the book because I thought that if I didn't, the book may become more of an aspiration of what's possible versus that this is doable now.
Yes, yeah. Your book is not what I would call a futuristic book, looking into the future of what is possible with these technologies. It's let's call it a practitioner's book. Somebody could take a chapter and really start implementing in a specific area that they have decided to go deep and use what you're prescribing as a way to approach a specific agent. So
Yeah.
orchestration flow.
Yeah, I even felt it was important to create a video. And I thought about it. I said, I remember walking into a bookstore in early 2000s because that was the way to learn about programming and computer science. You used to go to a bookstore and buy a book. And some of the books came with a CD. I don't know if you remember that. But
Yeah.
the back of the book, you had
And
little
a
pouch,
plastic pouch
a little
with a
pouch,
CD.
plastic pouch, and there was a CD-ROM. And the CD you had sample codes, the README files, and you had little demos, EXEs that you would run on your
Yes.
PC, files. So when I was writing the Agentic Bank, I thought, that's interesting. Should I do something similar? But it's now 2023. So I created a video. And in the video, you have Lisa, who's the treasurer. You have Sam, Maria, Alejandro, are the treasury agents. And they're no Zoom call. And they're in a video conference. And in the video conference, they're managing a situation. It's a crisis. And you see how then Maria as a human is interacting with her AI agents, but these are like in the video, it's like you and I. They're having a meeting. And what I did is I took that and then I put an implementation guide of the exact video. So I said, okay, this is exactly how you build this. This is how you build Maria, Alejandro, and Sam. What LLM you can choose, what RAG you can build for retrieval augmented generation, what tools they use to get to those outcomes, the orchestration, the data layer, the governance, the audit, the governance. So I pretty much laid out how to take that video and go implement it in your business. And yeah, doesn't have to be a treasury use case. You could take that implementation guide and do it pretty much for any use case you would like to use.
Are you still recommending this agentic committee concept that you have in the book, or is it, let's say, outdated?
Look, I'm starting to, just with myself, I'm starting to debate this concept of the human chain. In any business, if you walk in at any time of the day, you will find, especially now, the way we work, you will find people in committees and subcommittees, and you will see emails going back and forth and triage happening because of a situation. And behind all of that is a management layer of human chains and different departments: legal, compliance, risk, product management, sales, your
Human
chief operating
resources,
officer,
marketing,
your CFO, your financial planning analysis, your procurement department. It's a human chain of decisions. And what I've been thinking about lately, in addition to your question about this governance committee, which in my mind was more geared toward the auditing and the certification and making sure that the risks we're taking were measurable based on data, grounded in data, so we can certify these agents and be comfortable with them as they go out to the financial market infrastructure and just between parentheses, that's why I brought in the tokenization and blockchain as part of the book to talk about, as we feel comfortable of the agents going out to the financial market infrastructure and executing payments and acting on behalf of a bank, we needed to also have a financial market infrastructure modernized and tokenized so that identity and other aspects of us taking that risk are established. So we don't have to deal with paperwork and databases and KYC in an agentic environment. And we can touch on that if you want a little bit deeper. But to your point, governance was more about how comfortable we feel about the data, but the human chain is not going away. So I feel that we need to tackle that moving forward as well. We need to understand, what does a management layer mean in a firm, in a company? What are people doing when they are spending multiple hours a day debating and trying to make decisions based on different angles of their role? So
Yeah.
I think that it comes down to logic. I think if you spend enough time, you're going to find that there is an algorithm or a logical way of dealing with those meetings and that human chain that can also become agentic, and we can elevate our people so that we can free up. And I'm telling you, that's a large percentage of time where people spend their capacity within any firm. And I feel that is the next level, is how that human chain be abstracted inside an organization using an agentic orchestration against the use cases that are being built for customer service, for technology, for services, for potentially sales, for potentially payments, or even risk management when it comes to fraud detection or fraud mitigation, cybersecurity. But how do we deal now with the management layer on the top of that, where decisions need to be made? I think that is the next opportunity.
Because really what you're saying is our organizations today have the organizational structure that you just mentioned, right? You have compliance department, you have marketing department, you have sales department, you have payments department, risk management, and so on. And in between those business silos, that's where we spend most of the time, because whether it's a customer inquiry or whether it's retail or business, it really goes through half a dozen of these departments, and we're not organized that way, right? Can we
Yes.
change that organizational structure, and how does it look like?
Yes. And it almost mimics the internet era. Our organizational structures mimic how we deploy technology in the internet era. Why? If you think about it, sales has a database, risk has a database, legal has a database, procurement has a database, your factory has a database, your treasury has a database, and you can go on and on. And each database has the information related to that function.
Yeah.
And now, when we go to meetings with all these figures, trying to make a decision, trying to triage potential crisis between a factory, sales, and treasury. Each one of those departments come in representing their domains. And so now we're discussing how we're going to resolve, and it mimics how data flows underneath as well. And AI comes in to abstract all of that. Agentic orchestration abstracts all of that. So how do we move with agentic orchestration while the organization layer does not evolve with it?
As we discuss, and I haven't seen, I've been inquiring about this because I'm sure that there are people that have spent their career on organizational structures, right? And I would think that they have gone deeper, but maybe not. Because at the end of the day, what we're saying here is anything that happens in a business that needs to be resolved, can we orchestrate that workflow, right?
Yes.
And then see where are the common threads to create an organizational structure that is based on
Yes.
responding to these resolutions rather than making
Yes.
these departments the way you said.
Yes.
And
Think about if we move toward an agent to human org model. So every department you just mentioned the team members that work in those departments. Let's call it, so we have a risk department, a legal department, sales department, and a treasury department. Within those departments, you will have teams that have agents assigned to them. Now, the agents will orchestrate across these multiple departments. They will use context database information, and they will have access to tools, but there's zero emotions. There's zero problems with agendas, conflict of agendas. There's zero problems with potential corporate politics in many ways. Different priorities being measured against different scorecards, different incentives. And so these agents don't know any of that. They will just orchestrate among themselves. So you'll have a risk agent orchestrating with a legal agent, with a sales agent, with a treasury agent. And of course, the only time the humans will come to a meeting is there are exceptions. But that will be potentially 10% of the time being spent today in all these steering committees and subcommittees and triage calls and exchange of emails and files that go back and forth between these departments. Because again, they were built, their technologies were built in the internet era, and their organizational structure was modeled against how information flows and how the technologies that were available. AI now, I think the next opportunity is exactly that, is reimagining not just the business model with AI, reimagining organizational structures.
Organizational structures, yes, yes. And maybe some of these new foundation transaction models that NVIDIA is putting out the blueprint, and Revolut trained their first model, Pragma. Others are following, where they're using all sorts of data. It's not only transaction data like payments and so on. It's any event. Maybe those types of models, in combination with other small specialized models, can help reimagine these organizations. Although in terms of a bank, I think that we are a long way from seeing a newly born agentic bank because of the licensing aspect. It will take a time, right?
It's going to come down to trust. Now, I think if we can demonstrate with data, back to the previous topic, if we can demonstrate with data that we can establish trust.
Yes.
The same way that the debate around cryptocurrencies has been going on since 2012, and we can establish frameworks that it's not going to create instability, and regulations are there for a reason. They establish rules of the game that allow for transparency and stability. So if we can establish that as part of an agentic orchestration, I think that's what's between us and seeing the birth of an agentic bank, or as we traditional banks have been striving to become traditional banks wanting to become digital banks. If you think about it, our number one goal across the industry was for us to become a digital bank. Why? Because fintechs were born as digital banks, and we could see the benefits of being a digital bank because it gave you operational efficiency, it gave you better client experience, it let you innovate with the information and the data that you have access to. You become a data institution, and you start to see the impact of that in the balance sheet. It starts to reflect in your balance sheet, in your earnings. So we see the benefits, we saw the benefits, and we start to drive toward becoming a digital bank. Same thing, we can now see all of the benefits of potentially being an agentic bank, not just a digital bank. And so what is between us and that, between one bank being born agentic or an agentic native bank and one that it will transform to become an agentic bank, is that step of having to demonstrate, as we have done throughout our history as institutions, that trust can be protected and we can have transparency. Back to, we can demonstrate that we know how the models, we know that the outcome of the models can be audited, and that the risk potentially that can be introduced is mitigated. That is what's between us and seeing that happening.
I think, yes. I think you also mentioned this in the book, if I recall, that we have to get comfortable or show that the gains of this agentic reshuffling or transformation is not only about just efficiencies, but it also reduces risks. And therefore, there's all these benefits that come with that, which I'm not sure that we are there yet, right?
Look, our acid test, you and I talked about this earlier. Our acid test is going to be in the physical world. There isn't, the financial industry has tremendous risk because it's system stability, it's sovereign stability. The physical world punishes you very high when you make a mistake. When you have a car that self-drives, being guided by an LLM, potentially with tools, by a model, not an LLM, sorry, but by a
Yeah.
model that has access to tools, frontier model, that is high risk. And if you have a factory, not with robots, but robots being managed by a model with access to tools, making decisions that are consequential to the supply chain, that also very risky. And we're seeing a big drive toward that right now. And we're seeing a big drive toward AI leaving the building, leaving the screen, and entering the physical world
Yep.
in a form of commerce, in a form of production, supply chain. So I think that acceleration, because the benefits are very high, by the way, as you can imagine, that's where the widgets gets created, that's where the sell happen, that's where the receivables are, that's where the money flows. So the risk is high there, but we're seeing an acceleration in the physical AI space. Back to potentially this models are being trained on data that's not that we haven't created through the internet, but data that gets created in the real world, and the real world is messy. And so as those models understand the real world and become far more accurate, I think it's going to help us as well on understanding how we orchestrate payments and the risk that we need to take. And this is again back to banks and the financial industry. So if the last 3 to 4 years can become an example or can become a benchmark of what's going to happen in the next 3 years,
Or a
I would say
forecaster.
we're gonna get there very fast. And I think we're gonna get there very fast because we no longer rely on humans to write software. Software is writing software. Software is testing software, which has always been where we lacked the most because we needed to hire more people, engineers, and that is the cost of doing that and the cycle time. All of it is shrinking, and so now we will see models writing models, new models, or models upgrading themselves, finding bugs.
What I'm hearing from you, Driss, is that maybe we will eventually manage to link money to the real economy, because you're talking about physical trade, physical commerce, a supply chain in its physical form. And then we have the technologies, digital money, and hopefully identity native things that will make trade really flow, not how it does today, right? I mean, today we have workarounds with invoice financing and all these types of credit products to put band-aids on what the disconnect between money moving securely and in a regulated fashion and the real economy, because they're not well linked, right?
If you send me money today, locally or cross-border, we will need your instruction to be put on a rail. That instruction will sit separately from the money you're going to send me, which is on a rail that is not programmable. And first, I need to know who Effie is, and I'll need to establish your identity in a separate location. So let me rephrase. Effie will exist in a piece of paper or a document that says, yes, Effie is allowed to have access to this money, and she can initiate that transfer to Driss, and that will be stored somewhere. And then that request of send me the money for some reason, because I'm selling you a good.
But let's talk about a scenario where we're talking about real trade, like, I bought from you.
Exactly. I'm selling you something. And there's this condition.
Next pair of glasses, right?
I'm going to pay Driss in 60 days and only when I receive the goods, all of that will be stored somewhere else. And then later, if I want to give you a historical document that says these are all the transactions you made against these goods, this is the purchase order, this is the invoice, all of that, the condition, I'll give you another, it's going to be stored somewhere else. So identity is separate from the movement of money, from the money itself, from the conditions on the money and the contract that is built on that transaction. That's the reality today.
Yeah.
And behind that is a human chain that has to look at different moments of all those transactions and reconcile. It's a very inefficient, it's very expensive. You wonder why almost half of the world population is not included in all of that, because it's very expensive to secure identity, to manage all those transactions and all those flows.
Authenticate, verify.
Authenticate, it's very expensive. So now money becomes tokenized. The orchestration and the movements and the intelligence that needs to sit on that tokenized money is tokenized itself. That's intelligence. That also is tokenized. The infrastructure is programmable. It's built on a blockchain, which is programmable, meaning we can include conditions, if else, then do this, do that. All those conditions can be built. You have one token that has intelligence, that has a form of money which is regulated, that has conditions on that money, that has identity. Now we know, and has all the history from the start of when that token was minted until the time it's set on someone's account or wallet. You have all of that just by having that token as it moves, by having access to that token. That is the promise. That is what was missing from the digital economy. The digital economy grew very fast. Financial inclusion improved, social economic impact, the economy grew. But what was missing was an infrastructure, a form of money, and an orchestration of intelligence that actually can reason, make decisions in a governed way, and free humans, from inefficiency to move to a higher level of innovating, thinking, tackling bigger issues, education, health, transport, politics, you name it, abundance for this planet, where now we can move and deal with things that we have not been able to tackle because most of our time, our resources is spent on inefficient part of our life. In the personal life and at work, most of our time is spent in the inefficient side of the equation, not on the efficient side. So I think, again, this merge between a tokenized, programmable infrastructure, form of money, that between commerce and finance comes together and gives us a new era of abundance. As I said before, we'll have to make that decision because these models can move a lot faster in the way they are, how they're secured, and how they're accessed, how they're monetized, the value they create. There'll be a big difference if we collaborate or compete. And I know it's a topic we've covered in the past, just at a personal level, you and I, when we talked offline, but competing will slow down the evolution of everything we just discussed.
Yes.
Collaborating will accelerate it. So which one we're going to take and what outcome we're going to get, it'll be the asset test for the next 5 years.
Yeah, we have to take ownership and responsibility for that because the nature of these technologies, their capabilities are really open. If we create frictions because of geopolitics, because of the lack of harmonization of policies and regulations, then we won't reap the benefits that are possible, right? So in a nutshell, without being, this is not a gloom scenario, it's a reality that we risk creating a fragmented world that doesn't allow to unlock all these capabilities that we spoke about and lift everybody,
Yes.
everybody, right?
The models will continue, let's call them infrastructure. I think it's important for us to distinguish infrastructure, which I believe should be universal right. I think infrastructure is important, is a requirement to uplift everyone. And
Yeah, because it has
infrastructure,
the network effects, right?
absolutely.
That's the thing, right?
Absolutely. And infrastructure is the foundation for innovation, meaning the private sector can come on the top of that infrastructure and build a value proposition. So let's think of, I don't want to compare AI and where we are today with the advancement of AI to the internet infrastructure, or maybe even use the case of open banking as infrastructure. But we should think of infrastructure as something that needs to be built in a universal way. and then give access to that infrastructure to everyone. Everyone
it's
meaning
like the
individuals.
roads. It's like
Yes,
roads.
yes.
Let's say roads.
And then we build on the top of that a value proposition that should be monetized. And then between those two, adoption and how many of us can have access and use, and the benefits we will create for us individually as well as for our corporations, is going to drive the outcome, is going to drive the impact. And that's where we need to put our KPIs on. Why are we doing this? If we're a firm company, you say, why do we need to go that route? We need to define KPIs of success. But I think it's important, like health and education, AI needs to become an infrastructure, universal infrastructure, to go in that abundance route for us as a society to uplift everyone and move to the right place versus limiting access and making it a pay for token economy. And so if I am a child living in a rural area, but I have access to the internet and have a smartphone, I could, as a child, I could have access to a private education through AI. But if you make that a $300 a month, now you just excluded me from potentially becoming the new genius that will take AI to the next level, potentially when I am an adult, because now I had access to quality education. Same thing with healthcare, same thing with other fundamental services that make society gets uplifted. So I think we need to think about that, but we shouldn't ignore, or we shouldn't minimize from the role of the private sector, who will need to innovate and create value in that infrastructure. And yes, should profit and monetize, because that is how innovation gets created. So it's not either this or that, is this and that together for better outcome.
100%. You reminded me of the example, the recent example of what's it called, the AI company that's focused on image generation that innovated in the health sector by introducing a solution where you enter into the water and there's all these sensors and they can do a very cheap, holistic detection of your body. I think it's Midjourney that did that. That kind of innovation from the public sector is just the kind of things that we want. And as you said, if the intention is to prioritize these two areas of education and health that are really, access to them are human rights and they have immense social impact, then the rest will follow, right?
And I would not leave finance out of that. So I think it's health, education, and financial inclusion. Those three together provide the ingredients for social impact. And we need social impact because, look, each one of us has a story. And those of us that potentially start from scratch, from zero, where we did not have access to either good education, health, or finance, having a bank account, being able to receive money in an electronic way, or even have a bank account where you could save potentially and access credit. We can, for those of us that have had those experiences, we know the importance of them. We know the importance. We know that we saw our life changing as we had, for example, access to finance, to credit. We saw how we could improve our life. We saw how by accessing education we could improve our skills, and what our hour became worth more as we gain more skills and education. And so you go from that unprivileged, invisible part of society to become invisible and to enter the middle class and to start growing and potentially contributing to society. So at the end of the day, everyone benefits. Everyone benefits. There's economic impact beside the social impact. So AI can play a big role of that, again, if it becomes an infrastructure, a universal infrastructure. It can have a big impact. The same way the internet had an impact by creating new economies and giving and improving financial inclusion and shrinking the informal economy. AI can come in and give a boost to all of that, because again, we're talking about intelligence that can reason and act and free our time to focus on higher value activities.
And there are higher value activities that are worth putting our time in, and that maybe we haven't been able to do so because of the industrial mindset and a revolution of being very task oriented instead of having a more focus on people, society, and nature, and discovering so many things that we need to discover. We know very little about the intelligence of our own organism, our brain. We know very little about the universe. I hope that all these technologies help us understand this world much better than we do at a deeper level, not for our profit.
Absolutely. The human connections are at the center of human evolution. And we have less human connections now because the inefficiencies that were created by technology, we could say, are quite high. So sometimes we think about technology eliminating inefficiencies, but I truly believe that technology has minimized from human connections.
Yeah.
And that is in the corporate world as well as in the personal world. You could see the impact of lower human connections in families and relationships, in mentoring, in coaching, and as well as potentially, as like I said, in our personal life and at work. But now I believe AI, because it's not just a technology upgrade, but it's also a way of unlocking capacity. It's not about replacing humans, it's letting humans being augmented so they can decide where to spend the unlocked capacity. And I truly believe that it's going to move toward human connections. And as it moves toward human connections, our life gets improved because we can solve bigger challenges, bigger problems, higher value activities that are sitting out there waiting for us to have time for them, but in our personal life as well. It's
It
going to
will
become
feel more in alignment with a purpose rather than anything else. Driss,
absolutely.
I'd like to close here. We could talk hours together on this topic. Thank you very much. And as I said, I'll share links to your book. More people need to read it and
Thank
benefit.
you so much, Effie. It's a pleasure. It's a pleasure. And I look forward to continuing the conversation in this fast moving, fast paced environment where technology's intersection with finance and with the human fabric itself. Thank
Yeah.
you very much.